if we were starting from scratch and we didn't have the construction management in-house, already a pretty sizable portfolio of single family properties and all that, then starting out small doesn't make sense. We're adding on capacity. We're adding on deals. We have all this great cash flowing properties. We want to get some experience. For us, that made sense.
The Apartment Gurus podcast is brought to you by Greenlight Equity Group, an apartment acquisitions and holdings firm co-founded by Carl York and Tate Siemer, host of this show. We offer you the opportunity to be an owner of cash-flowing, wealth-growing apartments without the headaches of being a landlord. These assets are recession-resistant, risk-mitigated, offer significant tax advantages, and are a great alternative to the stock market. Ready to check it out? Go to www.investwithgreenlight.com today to book a personal consultation with Carl or Tate. Again, that's investwithgreenlight.com. We look forward to meeting you. Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome, everybody, back to another episode of the Apartment Gurus podcast. Super excited today to welcome Jordan DSilva to the show. Jordan is a real estate, multifamily entrepreneur extraordinaire from Dallas, Texas. He owns and operates over 750 units and about $50 million in assets under management, which is about where Greenlight is. So kind of a similar trajectory in our business world. And you're going to want to check him out on LinkedIn for sure. So it's Jordan DSilva, which is last name is DSilva, no apostrophe. Just that's correct, right, Jordan?
Yeah, I took out the apostrophe and all my stuff because everyone kept getting confused. So appreciate that.
Yeah. So Jordan DSilva on LinkedIn, but also check out webcityequity.com. Again, webcityequity.com. Really great landing page there for you investors that are looking to put together your own landing page or improve yours. He's got a really good one to model. So Jordan, welcome to the show, man. I'm really glad to have you.
Yeah, I appreciate you having me on. It's great to be on, and I've seen some of your other episodes, and I really appreciate your taking the time for me.
Yeah, of course. Yeah, it's great to have you. So just to get started, man, share a little bit about you and kind of how you got to where you are and what you're up to today with Web City Equity.
Yeah, for sure. And really, it goes back to my dad. And I think it's a typical story that you hear from a lot of people that are getting into apartment investing. His story is even, to me, more incredible just because of the obstacles that he faced. So he was an immigrant from India, grew up in a very impoverished background, and came to this country after his father had passed away, and he was working full-time, going to school just at age 16, came over to the U.S. when he was 21, just trying to get into some business, was able to start a small manufacturing company. Eventually, he figured out that real estate was the best way to get generational wealth, and he figured that out at quite a young age and transitioned from manufacturing business to real estate, buying mobile home parks, multifamily, and doing it with the thesis that I'm going to go to places where nobody else is willing to go. Because he'd been through so much, going to a D, F class area where high crime, gang violence, things like that, it didn't scare him. So he started out investing in Compton, California, really back in the 80s and late 70s. Did that for a while, built up a great portfolio, really just grinding harder than anybody else in the field, and eventually sold out, came to Dallas in 2005 when I was 9 years old, started Web City Properties. And that business, our model there was to buy single family homes in Southern Dallas, which is a higher crime, lower income market. He would buy those for 10, 20, 30,000. You'd put in another 20 to 30,000 and sell it for 2 to 3 times his investment using seller financing. So you make that margin on the seller financing and only require a smaller down payment, but charge a higher interest rate to buyers who couldn't get conventional loans. And so great cash flowing, great margins, great cash flowing assets, and did that for about 15 years. And then I took over the business. Unfortunately, he passed away in 2020. And he had built up a great legacy though. Really the past 3 years has been about taking his legacy and making it my own and figuring out how do I scale this business and use it as a vehicle for impact in the world. And so our company is very impact minded focused. We are property management in-house, construction management in-house. We have transitioned from the note business to long-term single-family rental properties to residential development, single-family home builds, and then multifamily, which is the most recent thing. Back in 2021, we really started figuring out that scale was through multifamily. And so done that for a couple of years, and now we're continuing to grow, looking for portfolios of single-family properties, looking for residential development opportunities, and also looking for value add here in DFW.
Yeah, I was going to ask you, so that's the market you're focused solely on, or do you look at other markets?
We had dabbled a little bit in some other markets, just trying to see it. But I think we realized pretty quickly here that our advantage was in Dallas, and it's such a great market. Why would you run away from the advantage? We're all focused on North Texas, and that's really where we see the growth happening because of how big the market is too, right? Dallas Fort Worth it's a behemoth of a market.
It sure
not
is.
A monolith, right? So it's certainly, we're very bullish on DFW and the North Texas market as a whole.
Yeah. Yeah. And for listeners, like when you're doing market analysis, start in your backyard, either where you are right now or where you've been, where you have lived, where you have some expertise, because that's a competitive advantage that, as Jordan said, he has by just virtue of it's a home field advantage, essentially. So yeah, it makes tons of sense. So just to circle back for a second, what's it mean to you? You know, you said your mission, or I forget exactly how you put it, but something to the effect of your mission really is to fulfill upon your dad's legacy. Like, what does that mean to you?
Yeah, I think what it means to me is that he's not like a typical guy that is just out there to get rich and live a certain lifestyle. It was always about, even though he grew up in poverty, for him, it was never about, I want to escape poverty and get into a lifestyle of fame and fortune. It was more of, I want to get to a point where I'm out of poverty and then I can take other people out of poverty. So he always impressed upon me that this money that you make from real estate, you make money, first of all. It was never a thing like, we're not a nonprofit, we're not a charity. Make the money, but do it so that you can use it as a vehicle for change. Right. And so as a company, we are focused primarily on making great returns, but we do it in a way that we know that we're going to return back to the community and help people in the communities where we invest. And so you're keeping the money in the community and cycling it through, giving back, investing in nonprofits after you've made those great returns. And I do all that really with the lens of, I want to make him proud. I want to use Web City Properties as a vehicle for change for my own purpose as a human being. And I also think that real estate as a whole, and especially in Dallas, is the best way to do that. And I think that is the most sustainable way is to have a great business that makes a lot of money, that can give back and do great work in the community.
Yeah, man. Well said and well answered. I mean, you clearly thought a lot about this and clearly know what makes Jordan tick, what makes Web City Equity tick, and what you're all about and what you're creating in the world. And to have that kind of purpose and meaning behind what you're doing is a tremendous force. Got to really positively impact you guys.
Yeah, I think that's the kind of investors that we want anyways, right? We always tell investors that we're not just about, we are primarily focused on making money. But if you want to invest in a company that makes a great return, but also is doing their part in the community so where you can feel good about your investment, then we're the person for you. And I think that resonates a lot with, especially a lot of investors now have a more sense of, and the younger generations as well, has a more sense of how is my impact on the world and want to leave their own legacy. And that's a great way to do it, by investing in companies that are doing the good work.
Yeah. So out of the 50 million you guys have under management, is a chunk of that multifamily or?
Yes, I would say a smaller percentage, probably around maybe 10% of that is multi. The rest of it is single family rentals and mortgage notes that have been acquired over 15, 17 years. But if 10% of that is from about a year and a half of work, then exponential growth says that we will be doubling and tripling hopefully here in the next couple of years.
What does your multifamily effort look like? Do you have team members that are devoted to it? How do you contribute to it? Like, what does that all look like?
Yeah, I think we just kind of shifted our model from, single family. It happens to be somewhat of an easier game when it comes to acquisitions, especially in our market, just because we know everything about the neighborhoods we want to buy,
Yeah.
right? So we're buying a lot of scattered site, single family stuff and portfolios that are in our neighborhood. So we know them very well. And we know all of our numbers. With multifamily, it's just different. It's also value different, right? You go through brokers. You have to raise capital for every deal, of course, where single family, you can kind of use a lot of your internal capital or you can raise a fund. It's a little bit more kind of a longer process where you don't have to necessarily have a sense of urgency in that sense. So really focus more of our entire acquisitions department and strategy on multifamily and just set up our single family in a way that it continues to run, not autonomously, but with much less effort. So really, we've just entirely switched our acquisition strategy to multifamily, creating relationships with brokers, doing direct to seller campaigns on some of the smaller multifamily that is more likely to be sold direct to seller. And that's really what we're doing now, where we're actually hiring a director of acquisitions as well, because we realize that we need to increase our capacity to buy, especially with what we anticipate to be a more of a buyer's market here in the next 6 to 12 months.
Yeah. Okay. Got it. What's your big vision as you go forward? You're clearly expanding in a couple different parts of your business. So what's that look like to you?
Yeah. And I think it leads back to the model of great returns, great impact. And so we believe that the best way to do that is to acquire and build attainable and affordable workforce housing in underserved markets. And for us, Dallas has one of the more larger underserved markets, Southern Dallas. It's interesting side point that you could actually fit the entire city of Atlanta in Southern Dallas County.
Wow.
It's a huge area that has been untapped just because it's an area that people just forget. They think of North Dallas, they think of Plano and some of these other markets that are north of Dallas as some of the places to be. But Southern Dallas is going to have its day, and it's going to be pretty soon. So for us, it's how can we leverage those growing areas where they have been underserved? We can grow them. We can build affordable and attainable housing as part of that growth. And as a firm, then we're going to grow with them. And so that's the vision. It's really to create a model for impact, utilizing affordable and attainable housing development and value add. And then once we prove that model in this market, then let's go and do that in other markets and expand quickly. But for us, it's very much exponential. It's that let's get this first model figured out, very defined and very successfully. And then let's be aggressive and do it in other markets that have the same characteristics of Southern Dallas.
Yeah. Got it. On the multifamily side, this is the Apartment Gurus podcast, and we do focus on multifamily acquisitions and syndication and that sort of thing. What has been the biggest challenge for you that's unique to multifamily as opposed to single family?
Yeah, I think the biggest thing is just the valuations of things, right?
Okay.
It's at the beginning, especially now it's a little bit, I get it. But when you're starting out and you're buying a single family property, it's not too hard to understand how the margins work and how you make your money. And there's not a lot of fees involved. It's not promotes typically on a single family flip or long-term rental. So I think that was the biggest jarring onset of buying apartments was the valuation, understanding cap rates, what that meant, where's the alpha that you're trying to find, just understanding the whole model. And I think as I begin to understand it, I think the thing that's been challenging is just the way to be competitive in a market like Dallas, especially in 2021. There was 100 bids on every property, and it was and everything was over asking and hard day one, right? It's like, how do you compete with that as a firm, especially as an emerging firm? So I think that's been the challenge thing in Dallas is how do we be competitive? What do we leverage that makes us more competitive? Can we make up the difference in the operations, right? Is that where our advantage is at? Are we just better at understanding certain neighborhoods where some people don't see the value, right? So we've just had to really search and understand what our model looks like and how we can be competitive and see value in places that other people don't see it. So that way we can be competitive for those properties. And I think for us, that's led us to buying more smaller multifamily in C and D class markets that people don't necessarily see the same potential that we see.
Yeah. And that's that competitive advantage of knowing your market and being home field advantage, right?
Spot on. Exactly right.
Yeah. Awesome. What have been the biggest breakthroughs for you as far as the big positives that have come from your multifamily venture so far?
Yeah, I think just getting one deal under your belt and running it successfully, and it's a 12 unit. let's be realistic on what it is. It's not a 100-unit property, but we are proud of the 12-unit. That was our first multifamily property. We've owned it for a year and a half now, and it's producing an 11+% cash on cash return in year one. We've sped by our projections on both the expense and rent side up for our pro forma. We did a good job so far, right? We got to continue the pace, but it feels good to buy at least one deal. And to be fair, it was a $2.25 million deal. So it's 12 units, but it's $175K a door. So it just feels good to be successful and to validate that, hey, it is 12 units, but all my assumptions, my underwriting panned out pretty correctly. I was conservative, but I beat those projections. And it just gives you the confidence that, yeah, I bought a 12 unit. Well, I can translate this success to double, triple, quadruple what I did with this property.
Yep.
And I think our operations and our ability to execute proves that.
Would you recommend for investors that are looking to get into the multifamily space, would you recommend starting small like that? Do you think that's necessary? Or now that you've done it, do you think you could have gone bigger out of the gate, or it's worked out well for you, so no regrets, right? But what do you think about that whole question?
Yeah, I honestly think that if we were starting from scratch and we didn't have the property management in-house, the construction management in-house, we didn't have already a pretty sizable portfolio of single family properties and all that, then starting out small doesn't make sense, right? But we're adding on capacity, we're adding on deals, we're getting experience. We don't need to buy a big deal. We have all this great cash flowing properties. We want to get some experience. For us, that made sense. But if you're starting out and you're saying that, well, I'm going to nickel and dime my way up there, well, the cash flow we're getting from this 12 unit, it's nothing in the scope of things when it comes to like the rest of our business. Right. That's not the way to scale, but it just adds on. So for us, it was like, we're already making enough money. This will give us a good first deal to work on, and we can be more competitive on the smaller units. So it made sense for our plan, which is more of get experience, raise a little money, execute, and then go from there. And it's also too, like, we have additional capital to allocate, right? Let's allocate it to we have 93% of the equity in that deal. So we're making the majority of the returns on it. So it's like, okay, it's fine. But if you're starting out and you don't have the equity, you don't have the operations, I don't know why you would start off and do something where you don't have the economies of scale. Right? I would, if I was going to start off buying apartments and I didn't have all this, I would start off by looking to raise money for a big operator where I can get experience on a bigger deal and learn the operations while adding value to that operator. And then I can go out there, continue to do that and find bigger deals where you're making, I mean, that's how you can make your money and you can get that experience. Even now, I would love to be able to partner with a big operator on buying a 500-unit deal and get that experience, even with running a company. I feel like that would be a great experience.
For listeners, that's really gold right there, as far as a really great way to take your first foray into the multifamily space is co-GP up. That's the term, is co-GP. Become co-GP for an existing operator that knows what they're doing, that has a track record, has success, has integrity, it's proven all that, and raise capital for them, either your own or friends and family, and bring that to their deal so that you're on the GP. And at that point, the GP, which is the active side of the deal, the general partnership, the active investors, they're the ones that run the deal. Like, they're the ones that are on the asset management meetings and doing the due diligence before the purchase, and really everything except for investing in the properties in the GP's hands. The LP, the limited partners, of course, are your passive investors, and their only job is to bring capital. So getting on a GP is a great way to, number one, build your track record, because those are doors that you own, right? Like, you can legit say, I own this many doors. And so it goes to your unit count, your track record, but most importantly, it goes to your learning the business and getting you ready to step up into maybe a lead GP position on your next deal or your next 3 deals down the road, or whatever that looks like. So yeah, man, I think that's some really wise thinking from you on that. I appreciate your thoughts there.
And we've done it. Actually, I should mention, not a huge deal, but we are assisting asset managing on a 96-unit deal as a co-GP with another sponsor based out of California. So we're boots on the ground here, and the deal's in Waco, Texas, about an hour and a half from where I live in Dallas. And so I am able to gain experience as a co-GP, learning How do I manage a 96 unit deal? Student
Right.
housing makes it even more challenged potentially. So I've learned a lot of lessons from that deal, even though I only have a small percentage of the GP. Learning the processes for that has made it a lot more palatable for me to go out there and try to buy 100+ unit deals.
Yeah. Yeah. So smart. All right. Well, just to kind of start to circle up here. So for you, you're a young dude. I did the math briefly in my head when you said how old you were in, I think, 2005 and when you moved to Texas. So what do you see in yourself that kind of your superpowers and the difference making ingredients that you have that you bring to the table that have made you successful, Jordan?
Yeah, well, first of all, I got to be transparent in that I've been so fortunate to have a dad who looked out for me and
Sure.
raised me to understand the keys to building generational wealth.
Yeah.
I grew up on the Robert Kiyosaki text, and I think Think and Grow Rich, Napoleon Hill
Yep.
book, and on all those things, that was a regular part of growing up. And two, I would also say is like for people out there that are raising their kids and you have a business that's growing, from a child's perspective, I think that my dad did the most optimal job raising somebody in an environment where there was growing wealth. And he made sure I knew about the business and about it growing. And he was never lying about that to make me feel like, oh, we're not well off. And it was very much though the understanding that doesn't come easy, doesn't come naturally, that you have to grind at it. And then it's not yours, that you are a steward of this money. So I feel like my superpower is, first of all, that I was able to have a dad like that. But then the second of all, what I share with him, I think from a trait standpoint, is the passion, right? I think it comes out every time I talk about real estate or talk about social impact, is that we're a passionate family. We're a passionate people. And that's what's resonated throughout my family and through me and my dad, is that when you have passion for something, and if the passion is, for me, it's social impact. And I understand that real estate is the method to get to that place. And making good returns for our investors is the way to get to that place.
Right.
Then my passion will make me work harder than you. My passion will make me find a solution to problems that you don't even want to face. So I feel like that's what I can, and the passion also inspires your team, right? It drives them to a bigger vision. So I think that's what our superpower has always been. My dad was never the best manager of people. He was never the smartest guy in the room, but he was always going to outwork you, and he was always going to have more passion for his purpose than you.
Yeah.
And I think I can take on that as well.
Yeah. And it sounds like you put good people around him, obviously yourself, not to mention, very last but not least, your very self, to have great people around him. And you don't have to be the smartest guy in the room when you kind of approach it from a who, not how perspective.
Love that. Who, not how, man. That's so key.
Yeah. So on that note, you mentioned Kiyosaki, you mentioned Napoleon Hill, Think and Grow Rich. Any other kind of foundational books, really anything else, any other kind of thought leadership, audiobooks, podcasts that have been kind of key for you?
I'll just say the most recent one that has really impacted our business from an entrepreneurial standpoint is EOS, by the book Traction.
Traction, yeah.
By Gino Wickman.
Okay, yep.
So that book we actually hired an EOS entrepreneurial operating system. We hired an implementer to help us implement those systems from the book into our company. And it's been a game changer. And I think it kind of goes back to what I said earlier about inspiring the team.
Yeah.
Well, when we're single family, multifamily development, we're doing so many things and we're changing so fast. The team kind of got confused. What are we doing here? And what EOS allowed us to do was, it allowed me to better communicate to the team what our purpose is, which was the social impact piece. Then it was like, how do we do that? And it really just connected the dots for the team. It allowed me to put my thoughts into a structured format where they understood it and they understood their role in the business to execute that vision.
Yeah.
And then, of course, they're inspired by the vision because they know what it is and they align with their core values that, hey, I value the same things the company values. So I'm more motivated to take on my role. So all those things, and not to mention all the, how it does with systems and processes in your business, 10-year targets, 3-year targets. It makes those big visions bite-sized pieces that you can follow a trail to. I'd highly recommend any business person out there that has a business that's up and running, that you take a look at that book and see how it can impact your team.
Yeah. We'll reference Traction in the show notes, but the EOS, Entrepreneurial Operating System, it's a tremendous, as you're growing a small team, it's really a tremendous system. Greenlight, we've just stayed pretty small. It's really Carl and myself, and we've got some VAs that we work with, and then just kind of our external power team. So we haven't fully embraced the EOS model, but as we grow and add people, we certainly will. And we have a vivid vision and a clear idea of what we're up to. And growth is definitely in our future as far as human resources and bringing in key individuals. So awesome, man. Well, I guess just to kind of round things out, Jordan, just any last kind of words of wisdom for the listeners that are looking to kind of take the steps that you've taken. And a lot of listeners have some single family experience or doing single family, see the magic in the multifamily space of scale. And like you mentioned, economies of scale and the ability to really grow wealth pretty rapidly in the multifamily space. You have any other kind of final thoughts for those folks?
I'd say two things. And this is really coming just from, I've done so much networking over the last year, trying to get as much knowledge from people myself.
Yeah.
Even including people like you and learning from other operators. The first thing I would say is, know your strengths and know what you bring to the table.
Yeah,
like you mentioned earlier, we talked about if you can raise money for a deal, you can add value a lot of times to an operator who's bigger, more experienced. So understanding what is your value? For us, I brought value to this California investor who needed someone on the ground, right? What can you add to a team and validate, first of all, this is a strength that I have and it's a strength that I can leverage to get to where I want to be.
Yeah.
And the second thing I would say on top of that is know where you want to be and know where you want to get to be, right? Yeah. Don't live somebody else's vision. I think one thing that I've struggled with personally is seeing these big operators or seeing the Grant Cardones or whoever that you're looking at in the space in the social media world and saying, oh man, I want to live like that guy, or getting comparison syndrome or shiny object syndrome. It's hard on social media, especially because you have to do it to raise money and to build your brand. But it's hard not to, while you're doing that, look at everybody else and all the cool things they're doing, because they're all trying to do the same thing you are, which is build their brands, right? You can kind of let yourself get lost in that and not understand what you really want to do. Mm-hmm. Not everybody needs to or wants to build a big empire. Some people want to just have a couple properties, have good cash flow, and they're good, right? They're set for life. They just want to have a more passive lifestyle. Some people just want to be LPs, not even GPs, right?
Right.
So don't do something else just because somebody else is doing it and you like how it looks, how their lifestyle looks. Know what you want to do and what you're good at, and just have a clear vision for your life that is not messed up by the visions you get from other people. That's the big thing I would say.
Dude, that's absolutely foundational as far as I'm concerned. For listeners, that's really, really good stuff. Take a second, rewind 5 minutes, listen to that again. There's some really, really important stuff there. Knowing yourself in life in general is such a key thing. It's so empowering to know what you're working with, right? And to know your superpowers and to know where you can really bring value and double down, and talked extensively about the value of bringing value, right? Knowing what it is that you can bring to a team, to a syndicator, to a deal, and hit the ground running with one of those deals, and boom, you're in. It's happening for you. So, dude, this has been great. Thank you so much for everything that you've shared, your purpose-driven life, your purpose-driven business. It's very inspiring. I'm sure listeners got a ton out of this. And so on that note, what's the best way for listeners to reach out to you and get in touch?
You mentioned our website, www.webcityequity.com. Yep. We have a contact page there where you can connect and we can jump on a call and discuss your investment goals. And then also subscribe to the newsletter. In that newsletter, we try to be very little unique compared to, I think, other newsletters that are very extensive on all the cool stuff we're doing, a lot of behind the scenes content into our processes and our systems. And then we always talk about our social impact and the models that we do to create social impact. So subscribe to the newsletter. We're always sharing cool stuff there. And then we'll always love to jump on a call when I'm available.
Yeah. Awesome. Great stuff, Jordan. Thank you so much. And really appreciate you being on the show and sharing your light with us, so to speak.
Awesome. And well, I appreciate your time again. You're a phenomenal operator, and it sounds like you're building a great empire there as well. So I appreciate the time.
Our first deal at Greenlight was a 12-unit deal. So there's definitely a similar...
Something about that 12, man. Something about that 12 unit.
Yeah. And we came from single family, and we weren't doing it the level you guys were doing it. We were flipping properties for the most part. And really, 4 or 5 years ago, kind of saw the light and this 12-unit deal really fell into our lap. Like we weren't looking for one. So we were very blessed in that way.
Well, you
So,
put yourself in a good position. That's how opportunities happen, right?
That's right.
Put yourself in a position to catch them.
Yeah. And here's a good one to kind of leave everybody with is my personal coach. He was on a guest on our mastermind call today, the Multifamily Octane Mastermind, which if you're serious about this business, we really should talk. The Multifamily Octane Mastermind that I facilitate is just red hot. And if you want to take this to the next level and be sure that you do, like joining that is tremendous. But my coach was the guest today, and he said, just consider that there's two perspectives that really are kind of simultaneously true at one time. He said, there's no opportunity and everything's an opportunity. And if you think about it from the perspective of actually you're the opportunity, right? Like you just said, put yourself in the right position, Jordan, like that, doing the work, like falling in love with the process, doing the work, putting yourself in the right position that opportunities are there and you're there to create them when they come up. It's like a co-creation almost. Like that's you, man. It's all on you. So being ready, having the right mindset, having done the work through the limiting beliefs that you might have, and being ready with your resources and your team and everything else that you've built, your brand, all that stuff, capital raising. That's it. That's where the magic is. So on that, we'll wrap it up with that. How's that, Jordan? Sound good? That's
awesome, man. That was great stuff.
Awesome.
I appreciate it again.
Yeah, you're welcome. And listeners, thank you. Love you guys. Love bringing this stuff to you. Hope you got a lot out of this one, and we will see you on the next one. Take care, everybody. This episode of The Apartment Gurus is being brought to you by Greenlight Equity Group. Greenlight Equity Group acquires and operates cash-flowing multifamily assets in progressive metropolitan markets such as Salt Lake City, Idaho, San Antonio, Oklahoma City, and Columbus, Ohio. Greenlight targets consistent, solid returns for its investors and a healthy environment for residents by operating high-quality, safe, clean, affordable apartment communities. To learn more about Greenlight and to sign up for the investor list, go to www.glequitygroup.com.
This has been The Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of The Apartment Gurus.